What are the opportunities and where in Asia do you see first and foremost this year?
Okay, so let me just skip for a second China, just because, I mean, we're here, there's a lot here. You see the 2,200 investors around us, everyone very excited about the country. So if we leave that one aside, I mean, there's opportunities everywhere. I mean, when we look at the region, Southeast Asia is still very exciting for a lot of companies. We see even intra-Asian activity going up this year. If you look at, for example, activity in the first quarter, it went up from 6 billion to 8 billion intra-Asian. So Southeast Asia is getting a lot of attention. India is growing faster than everyone has expected and in a consistent basis, so that creates a lot of opportunities. And then you see some of the outbound investment coming out of Japan, and that's also been quite high. So I think those, generate a lot of opportunities for whether it's international investors, local companies going offshore, and areas like that.
How about the opportunities within the various sectors, be it equities or fixed income? Where do you see the best opportunities?
Well, equities are, pretty high right now, and there's quite a bit of activity. But fixed income is also, we've seen record issuances in the first quarter. Low rates obviously help on that. Companies being active and having to fund a lot of that expansion. It's also generating a lot of leveraging that's taking place. And so fixed income, I think, from a corporate point of view, it's a good opportunity. From an investor point of view, people are concerned about rates going up eventually, and that potentially causing bonds to come down. But overall, it's an active, exciting market.
Yeah, now, of course, Jamie Dimon, your chairman, did talk about the securities potential for the joint venture here. How much is that on your table and your remit to really get a new joint venture? We like to offer investors the opportunity to look at everything. Domestic, international, everything. Today, the domestic market in China is a market where we cannot have a participation. And the equity market in China is about $8 trillion, $8 trillion. The bond market in China is about $10 trillion. It's the third largest in the world. So we're talking about the second largest equity market in the world, third largest bond market in the world. And it's a market that we don't have direct access and an opportunity to offer to our clients and investors. And therefore, over the long term, we would love to be active in that market. And that's without a question. So it's something that we're focused on. Are you hopeful that the Bond Connect and also, of course, the Equities Connect between Shanghai and Shenzhen will be a catalyst for foreign institutional money into and out of China?
It's a factor. I mean, it's a step in the right direction. There'll be more liquidity going in and out. In both markets. Clearly, we've had the Hong Kong Connect now for some time. We're having the Shenzhen Connect now, and then the Bond Connect is coming. So it's a new thing. It's still not the complete offering. Whenever there's free flow of capital going in and out, that'll be fantastic, but that's a few years away, I think.
Still a baby step, but they are undergoing a deleveraging campaign right now. Specifically, what opportunities in that as corporates deleverage and they maybe hive off assets? There's going to be some sales. How do you see JPMorgan facilitating that or helping Chinese corporates to deleverage?
Well, I would say three areas that could be of interest. One, companies that have invested internationally, expanded internationally. Now they have some great assets, great brands, and they'll decide eventually maybe it's a good time to list some of those assets internationally. And that will help reduce leverage, whether it's in private companies or on SOEs. Secondly, SOE restructuring. These entities have lots of businesses. Some of them don't really match very well with each other. We can help in that and help provide some corporate clarity. Right. And then thirdly, just through the regular capital markets, we're raising additional equity, raising more international bonds, and providing, refinancing. Did
the capital controls that the Chinese instilled in the beginning part of the year to kind of prevent the outflows of renminbi and some panic in the currency, did that affect, from your perspective, some of the cross-border deals that you were working on or hoping to get? Not so much in the ones that we were working on. I think that those controls were targeted at more speculative flows of people trying to get some money out of the country. Our traditional client base was more focused on very strategic transactions that made a lot of sense, and therefore we did not see a lot of impact in our business. Now, clearly, if you look at the figures, I mean, last year we had over $200 billion of outgoing transactions, acquisitions, and this year it's a significantly reduced number. So maybe with luck we get to like 150 billion. So it'll be lower overall. But I did not see a big impact in our transaction flows.
Okay, how about hiring for Asia Pacific? What kind of numbers for headcount do you see?
We're still on the positive trend. I mean, we prefer not to be very volatile. So when times were very hot and everyone was hiring, we probably did not hire as much. When things go very slow, we try to continue hiring. So we're probably going to continue at a very reasonable trend. Still positive trend. We're still on a very upward trajectory, but we don't want to go hot and cold very actively.
Still a little cautious, though. A little bit of caution?
Yeah, I mean, I think it's consistent with the previous era. We have not slowed it down.
All right.